Managing your business is hard, and making your business grow is even harder, but the real question we want to know is how do you actually pay yourself from your UK-based limited company? Well, stay tuned. In this video, I'm going to go through it all with a complete walkthrough, and that is how to pay yourself in 2021, 2022. Hi there guys, if you don't know who I am, my name is Thomas Parkinson, and quite simply I have been running multiple businesses within the UK for at least the last 4 years. Pretty much right now my biggest business is selling on Amazon, and we're on a mission right now to do £1 million, and I'll drop a link up there. But quite simply I also run the business FastTrackFBA, whereby obviously we create this content for you. Now enough about me today. What are we going to go through in this video? So to get yourself to the point that you're able to pay yourself from a limited company, first of all, we need to go through some of the taxes. So in this video, we're going to go through number 1, what is corporation tax? Number 2, what is income tax? Number 3, what is national insurance? Number 4, what are dividends? And then finally, number 5, I'm going to show you how to pay yourself from a limited company in the UK with £40,000 worth of profit, and what is the best way to take that money out into your pocket. Okay, so quick thing before we start, I just need to give you a quick disclaimer. I am not a tax professional. I'm not a qualified accountant. I make these videos to support you in giving you a general understanding of what I've learned in my journey. Now, quite simply, if you are looking to pay yourself in the financial year 2021, 2022, do seek professional, independent financial advice from a qualified professional. They're going to tell you exactly what you need to know. This is a guide, but it isn't 100% perfect. Make sure you're getting that checked with an independent financial advisor. It's just going to help you out and make sure you get your tax affairs correct. Okay, so before we get into the £40,000 payment, how do you do that efficiently? We need to go through some taxes first. Why? Because quite simply, they are part of the process to get the most tax efficient way to get £40,000 out of your business and into your pocket. So let's go through it now. Okay, so what I've done is I've made this presentation here to hopefully explain it a lot clearer. While I appreciate that I can probably talk clearly, I think having a visual aid is really going to help you. So let's go through this now. The one thing which I will say is this video is made for the tax year, the financial year 2021-2022. So if you are looking at it for another year, just update the amounts. We'll probably create another video to support you. Okay, so the first things first, what you need to understand is quite simply corporation tax. Now, this is a tax that is charged on the company's profits. And for the financial year 2021-2022, the rate of corporation tax is 19%. So after all your expenses within your company, how much do you have to pay in tax on those profits that you generated? 19%. So the next tax we'll talk about is income tax. Now, this is the tax charged on you as an individual that is basically related to how much money you bring in. Now, this is how much you are paid from your business, and this is in particular around salary payments. So in this video, what we're going to do later on, when I give you the example, we'll talk about the income tax and how much you need to pay after you've paid the corporation tax, and we'll show that through the example for £40,000. So quite simply, income tax is tiered. It has different rates that you pay, and what you can see here is I've just put a table together to show you the income tax rates at the certain income levels. So you can have a look at that and see at the different brackets at which you pay. Now, the one thing I'll say is if you go from, let's say, for example, 50,000 or 49,000 up to 59,000 or 50,000, you don't all of a sudden pay the increased amount on the money back. You only pay it for every pound you earn over that bracket. So if you earn 51,000 or 49,000, you're only paying the additional, let's say, 40% on that £1,000 over the £50,000. So don't worry about like the moment I go over, I lose so much more. No, you only pay it for every pound over that threshold. So the next tax that you want to probably know about is national insurance. Now, quite simply, this is a value charged on the earnings paid for by the employer and the employees for state benefits. Quite simply, there's quite a few in national insurance. I'll just repeat them here. Lower earnings limit, primary threshold, secondary threshold, and the upper earnings limit. It does get quite confusing, hence why we say always speak to a professional about making sure that your tax return is correct. Now, in regards to national insurance, the lower earnings limit is the amount you need to earn to ensure that you get state benefits. This is things like pensions going on for yourself. Now, quite simply, this is £120 per week. That is how much you need to pay in order to achieve those state benefits. Now, the next one you need to know about national insurance is quite simply the primary threshold. Now, once you achieve or surpass, go over the primary threshold amount, you'll be charged at 12%, which is the primary threshold rate. And that's between a certain range. So quite simply, when you earn over £183 per week, which equates to about $9,500 per year, and up to $50,000 a year, you'll be charged at 12% of that earnings for national insurance contributions. Now, the next one you need to know is quite simply the secondary threshold. Now, the primary threshold is paid for by you, the employee of your company, but the secondary threshold is paid by your company, and it's paid by the employer, so your company. Now, quite simply, this is how much you need to pay 13.8% of your annual earnings when you're doing over, which is basically anything over £169 per week. So just be aware of that. Now, the final one you need to know about for national insurance, and again, it does get quite complex, is quite simply the upper earnings limit. Now, this is an increase in the amount you pay in tax, which is basically based on how much you are earning when you hit over a certain threshold. Now, quite simply, when you earn more than £50,000 per year as an individual, then the amount you need to pay as an employee and also the employer does increase. So as an employee, how much do you need to pay? Well, it's 2% of your annual earnings. And then in addition to that, your employer needs to pay 13.8% of your annual earnings as well. So just be very mindful of that. The next tax that you want to be aware of, and this is all part of how to get the money out of your business efficiently, is called dividends. Now, quite simply, this is the money you pay yourself after corporation tax. It's the profits that your business generates after taxes that you can distribute to its shareholders. Now, quite simply, you as an individual, what do you need to know? Well, for the tax year 2022, quite simply, you have what's known as a personal dividend tax-free allowance of £2,000. And also as well, if you have any dividends that are paid for you which are below the personal allowance, then you're not taxed on them either. But anything over the personal allowance or if you've paid in excess of £2,000, then quite simply, you will have to pay a dividend tax. What I will say is that 2% isn't the new rate you pay. That is in addition to the previous rate that you're paying as part of the lower earnings limit. So just be aware, it's the lower earning limits plus now an additional 2% as an employee on all incomes when you're earning over $50,000 per year. Now, the question you might be asking is how much do you pay in dividend tax? Well, quite simply, you can see here the different rates that you're going to need to pay as dividend tax when you take dividends from your business. So basically, when your income is the basic rate, you're going to pay 7.5. When it's higher rate, you're going to be paying 32.5. And when it's additional rate, obviously you're going to pay a much higher amount, 38.1. So just be aware of that. And we'll use those figures in our calculations going forward. So there are the taxes that you're going to need to know and think about. And don't get me wrong, they get quite complex. So quite simply, what we want to do is break it down now into two sections. The first section I'm going to talk about is how to earn $14,500 for free. And then what we'll do is we'll go on to a second section, which is about how to pay yourself efficiently from a limited company when you've made £40,000 of profit. So let's first of all go into the $14,500 and go back through that and explain how that works. So first of all, what we want to talk about is getting to $12,500. Why? Because this is your personal allowance, which is tax-free. So how do we do this in the most tax efficient way? Well, quite simply, what you're looking to do as an individual is to pay yourself as a basic salary, $7,500. Now, why? Because quite simply, this takes you over the lower earnings limit, which is about $6,240. So you get those state benefits, but also as well doesn't push you over to the next tier in the national insurance threshold. Now, so you paid yourself one part in regards to a salary payment from your company. And then the next part, what you want to do is pay yourself as a dividend. So £5,000 in dividends. And that basically makes you up to $12,500, which is going to be the tax-free allowance. So we've made ourselves $12,500, and we've seen how we can do that tax-free while still getting the state benefits. But how do you make up to $14,500? Well, remember I talked about you have a personal dividend allowance. Quite simply, you just want to pay yourself £2,000 as an additional dividend, which falls under your personal dividend allowance, which is again tax-free. So you've earned $12,500 as part of the personal allowance, and in addition to that, you've earned an additional $2,000, which is part of your dividend tax allowance, which is all tax-free, totaling $14,500. Okay, so that is how you pay yourself $14,500 from your company, tax-free, the most efficient way. But now, let's go through how to pay yourself from profits of £40,000 within the UK limited company in the tax year 2021-2022. Let's go through it now. Okay, so first things first, you've earned £40,000 from your business. What's the first thing you want to take out? Well, quite simply, you want to pay yourself first a salary of £8,787. Why? Because that is the primary threshold. So you're going to get all those state benefits, but you're not going to be paying additional taxes. It's keeping you the most tax efficient way. Now, once you've paid that out, you're going to have a remainder in your business of about £31,000. So that's how much profit your business has now generated. Now, quite simply, you're going to need to pay corporation tax on that remaining amount. So remember, that's at 19%. So we pay that and we're left with about £25,282 that we can now start to take out of our business in the most tax efficient way. Let's go through that now. So remember, we've got a personal allowance of £12,500 and we've already paid ourselves a salary of about £8,787. What we want to do is take the remaining £3,713 out as a dividend payment. Now that takes us up to our personal allowance, and in addition to that, what we want to do is add on the additional £2,000 tax-free that we have as a dividend allowance as well. So now remember, we've got £8,787 that we paid ourselves as salary, and we've also taken £5,713 as a dividend payment. So that totals £14,500. So I just want to remind you, remember we had £40,000 worth of profit within our business. We paid ourselves a salary initially, which is about $8,787. Then also what we've done is paid corporation tax on that amount after, and that has given us £25,282. Now from that £25,282, we've then taken the $5,713, which in dividends, which is part of our tax-free allowance. Now, quite simply, the remaining amount we want to take as dividends, but we are going to need to pay taxes on them. So dividend tax is 7.5%. So on the remaining amount, 569, we need to pay a dividend tax of 7.5%, which is £1,467. That means that we get to take out an additional £18,101 from our business, and we add that on to the £14,500. That leaves us with a total take-home allowance into our pocket of £32,601. Remember, we started with £40,000, and after all taxes in the most efficient way, £32,601. That's how you pay yourself from £40,000 profit in your business in 2021-2022. Okay, so that is quite complex, and the one thing which I'm going to say is if you want to see that more, or if you want to go into more detail, look down below. I'll drop a link where you can download those slides and maybe go through it yourself and just see the calculations. I'll also just go back to that disclaimer. This is complex. Tax is complex, and there's a reason why accountants get paid what they pay, because everyone's individual circumstances are different. So do seek professional advice on your personal finances. I cannot stress that enough. What I'm also going to recommend is I'll put a video around here about VAT, another tax in the UK, and if you don't know about that, I explain it. But what I will say is if you like this content, give me a thumbs up, just lets me know. And hey, if you want to see more like this, do hit that subscribe button. It's going to just let you know about more videos I release. So from me, Thomas Parkinson and FastTrackFBA, thank you very much.